Germany has rejected Greece's request for a 6-month extension to its loan agreement. Peter Dixon, senior economist at Commerzbank, joins us now for a global roundup from London. Peter, thank you so much for making the time to join us. Let's perhaps get a sense of how global markets reacted to the snub from Germany, but more importantly, what are the long-term consequences, at least until 28th of February, that this decision has?
Well, I think given all of the concerns surrounding this problem, markets have actually taken it remarkably calmly. We will know in 24 hours' time or thereabouts, how this is going to play out. We don't even have to wait until the end of February. I mean, we will get a Eurogroup meeting tomorrow. My guess is that despite all the brinkmanship which is going on between Germany on the one hand and Greece on the other, that we will get a deal, because the alternative is that Greece will eventually be frozen out of the eurozone. It will eventually therefore be ejected, and that could have incalculable consequences both for Greece and of course for the rest of the eurozone economy. So it's not an outcome which anybody wants to see.
There's a headline in the notoriously sensationalistic and slightly right-wing telegraph.co.uk, Peter, which says the following: Germany stuns markets in rejecting Greek offer for bailout extension. You've already discussed that. My headline is traders stunned broadcasters in doing absolutely nothing about anything. Maybe while the Greek situation sort of peters out, and it will tomorrow, there will be a deal. I really, really hope so, because the consequences of not being a deal are too ghastly in the short term anyway. What about the FOMC minutes the other night? I listened to something called Radio Free Wall Street and a rant from a chap called Lee Adler, and he was absolutely furious about the fact that they're still doing absolutely nothing about raising interest rates. Do you agree? Should they be normalised?
Well, arguably they should be, because in one sense you could say that interest rates today in many countries of the world are still at levels which were set in 2009, and we're an awful long way from there in economic terms. So yes, I think there is a strong case that US interest rates do need to be normalised, but I think the issue is, when do you start the process? It could have happened perhaps last year when economic conditions were a little bit more favourable, but of course at that time the US was still engaged in QE, so perhaps that wasn't such a good time after all. But I think the Fed will wait until such times as we see a little bit more stability in global markets, until at such times as we see inflation stabilising, before it starts to nudge them gently higher. But it's going to take a while longer before we see the FOMC taking any action, I think.
Hi Peter, it's Viv Cavender here. I know we all think that there'll probably be a deal in the next couple of days around Greece, but let's just take the opposite side. What actually happens, and what are the implications of no deal with the Eurogroup? What happens? What's the short-term and medium-term implications for Greece and the eurozone economies?
Well, I mean, I think that the eurozone economy in the short term probably doesn't do an awful lot, because we are seeing a situation in which the sentiment numbers appear to be improving. That could obviously turn around if we get a major shock, of course. The inflation numbers remain low but stable. Again, I think over the course of the longer term, things will turn around there. So, unless we get a major shock from the likes of Greece, which changes the sentiment picture altogether, I still think that the baseline scenario is gradual recovery, but it will be very gradual, and places like Greece and some of the peripheral countries, I think, may struggle to gain any traction.
Peter, of course, there was another set of minutes that was in focus today, and that was the accounts from the ECB. Did they tell us anything of significance?
Well, I don't think significance is the word I would use. I mean, I think there were a little bit more colour than perhaps we've got in the past. But I think that the general message was consistent with the views that we've got from ECB members over the course of recent weeks. I think the general picture is, things remain very tense. The ECB remains willing to do whatever it takes to give the economy a boost. And of course, we had a lot of discussion about how the QE process is likely to be managed. But I mean, again, I think in terms of the message, the main message which the ECB is trying to get across, I think Mr. Draghi has clearly done a very good job in communicating that during press conferences over the course of recent months.
On to geopolitics from economics, if we can, Peter. And the situation in Ukraine is starting to get out of hand, I think. I noticed a Sky News report this morning that was live, and it looked rather scary to me. And people are saying that perhaps Estonia and Lithuania and a couple of other countries are under threat. And there's a headline again in one of these newspapers about 2 Russian bears coming very close to UK airspace off the coast of Cornwall. Is this just brinkmanship from Putin, or is he trying to make a point here?
Well, I think he is trying to make a point. There's no doubt about that. But I mean, I think it's fair to say that the testing of NATO airspace by Russian aircraft has been going on for some time now, and I think it's something which we're all used to. But I do think that we clearly have a major problem in Ukraine, and that could certainly get out of hand. And I think it's a major geopolitical and possibly economic risk, which hasn't been factored into the market so far. We saw almost a year ago when things in Crimea started kicking off, we saw a huge spike in market volatility. We're not seeing that this time around. But obviously, if things continue to deteriorate, it's likely that the West will ratchet up the sanctions against Russia. And of course, who knows exactly how the Russians will respond. So the situation clearly is very fragile. And at least from a geopolitical standpoint, things look very volatile indeed.
A very big thank you to Peter Dixon, Senior Economist at Commerzbank.